Welcome to The Explainer. We're diving into CMB Tech's Q3 earnings call. And let me tell you, this wasn't just another quarter. It really feels like a huge pivot point for the whole company. All right, so let's get right into the big question, the real puzzle of the quarter. You've got revenue up a massive 105% year over year. Fantastic, right? But then earnings per share, or EPS, cratered by 86%. So why on earth did the stock rally? What did investors see that the headline numbers just don't show? And we're not talking a small bump here. In just the 2 days after the call, CMB Tech stock shot up by more than 8%. That's a pretty loud and clear signal that Wall Street was looking way past that messy EPS number and buying into a much bigger story. So to really get what the market was so excited about, we have to start with the numbers themselves. Let's break down the key figures from their report. Okay, check this out. The revenue came in at $454 million. I mean, that just blew past what analysts were expecting, beating consensus by about 15%. But then you look at the EPS, the earnings, at just 7 cents. That was either right on the money or maybe a little bit of a miss. It's this huge gap between the skyrocketing top line and the flat bottom line. That's where things get really interesting. And here's the first big clue as to what investors were really looking at. That EPS number? That's backward looking. This number, though, almost $3 billion, that's their contract backlog. That's money they've already locked in for the future. We're talking serious revenue visibility here, which is exactly what the market loves to see. And if that backlog wasn't enough, the CFO, Ludovic Savaries, basically spelled it out on the call. He said, look, at today's market rates, we could be adding $250 million in free cash flow every single quarter. That's the real story they're selling. We're talking about a potential billion-a-year cash machine. Now that gets your attention. Right, so this quarter was so much more than just a set of numbers. It was really the big reveal of a whole new strategy. The market wasn't just reacting to Q3, it was reacting to the birth of a new CMB Tech. And they laid out a super clear 3-step plan. Step 1, merge with Golden Ocean. Boom. Instant scale in dry bulk and tankers, the hottest parts of the market. Step 2, rejuvenate the fleet. They're selling off their older ships, the ones over 15 years old, to pay for modern, super efficient new ones. And step 3, a big pivot to green fuels. They're all in on ammonia and hydrogen and kind of stepping back from LNG. So what does all that M&A and fleet shuffling actually do? Well, it leads to this, increased spot exposure. All that means is they have way more ships on short-term contracts now. Why does that matter? Because it means they can cash in on today's super high market rates. This is the engine that's going to power that massive free cash flow the CFO was talking about. But management wasn't just blowing smoke. They were actually really upfront about the crosswinds in the shipping markets. They see a clear split between the winners and the losers right now. And here it is, a real tale of two markets. On one hand, they're super bullish on tankers and dry bulk. You've got tight supply, strong demand, the whole 9 yards. But on the other hand, they're pretty cautious about containers and chemicals. Why? Because there's a huge wave of new ships coming online, which could lead to overcapacity. And guess what? Their new strategy puts them squarely in the good camp. And this chart just nails the point. The order book, which is basically all the ships that have been ordered but aren't built yet, tells the whole story. For container ships, it's a whopping 32% of the current fleet. That's a ton of new supply coming. Now look at the big dry bulk ships, just 9%. That's the difference between a potential flood and a disciplined market. Okay, so we've got the numbers, the strategy, and the market backdrop. So what does it all mean for the next quarter? Let's get into our thesis for the next call. So here's our prediction for Q4. We think the market got it right. They totally looked past that confusing Q3 earnings number and focused on what's coming next. And that forward-looking story is way, way more exciting. And the logic here is pretty straightforward. Q3 was kind of a soft summer quarter, but management said themselves that the market started roaring back towards the end of it. So Q4 is going to be the first full quarter where they really get to ride these multi-year high spot rates. We think that free cash flow is going to ramp up fast, and that $250 million a quarter number from the CFO is going to start looking very, very real. And as that becomes clear, we expect the stock to keep climbing, probably even testing those recent highs around $11. So for all those reasons, our rating here is outperform. It really looks like CMB Tech is right at the beginning of a major earnings upcycle, and it's being driven by both a hot market and some really smart strategic moves. All right, let's wrap this up. If you're going to remember just a few things from this pivotal quarter, here's what they should be. First, and most importantly, look forward, not back. That Q3 EPS mess, it's old news. The real story is the revenue beat and that massive cash flow potential. Second, strategy is king. That Golden Ocean merger was perfectly timed, giving them huge scale right when it matters most. And third, they're playing a tale of two markets perfectly. They're all in on the strong parts like tankers and dry bulk while being protected from the weak spots like containers. And that really leaves us with a big long-term question here. Can CMB Tech actually transform itself from just another volatile shipping company into a premium energy transition infrastructure story? I mean, if they can keep delivering that cash flow and make good on their green fuels plan, the whole valuation of this company could change. That's the journey we'll all be watching. And just a reminder, this is not financial advice.